Let's bring in ARK Invest Chief Futurist Brett Winton for more on this. Of course, we have to ask a futurist. Brett, I'm sure you've been listening to our conversation, and I'm wondering where you think we are in this. I mean, before you came on our show and you talked about the great future, but right here, right now, are we in this tough transition period? We don't know what the regulatory framework is. We don't know what guardrails corporate America might put up on the use of AI at this point in time. And the cost for search is going to be much higher, at least for right now, as opposed to keyword search.
I think that corporate America is going to have to adapt to AI or die. I think that the competitive pressure in the marketplace is going to mean that those companies that aggressively onboard this technology and use the tools to the full extent will outcompete those companies that don't. And so, look at the announcement by Bain and OpenAI that they're going to help Coca-Cola onboard large language models into their corporate processes. I think you'll see a lot of announcements like that where companies say, hey, this is a really useful tool and we're going to use it to compete and win. And if you don't, you're not going to win. And if you don't win, you'll go bankrupt.
Well, what do you make of this Morgan Stanley report? I don't know if you got a chance to see it, effectively saying that keyword searches are about a fifth of a cent, and that a GPT search, enabled search, would be 5 times that roughly. And so the cost would be much more, up to $6.6 billion more for Google. And so, how should we think about this in terms of right now, in terms of how much more it'll cost to do a search?
Yeah, I think it disrupts traditional search. And I think you may even see, this will be classic innovator's dilemma if Google says, well, it's a good thing that Microsoft is taking all of this large language model search for us because we can't deliver it profitably. And we'd rather have them handle that unprofitable business. The reality is you're moving from a kind of business process cycle where people go to search as a portal to deliver them onto something else, and get to a spot where they begin to expect answers from an AI engine that's going to be living in the application that they're using. And so the AI both breaks the revenue model and the cost model for traditional search. And so I think it imperils Google in its current competitive position.
Brett, it's Karen. So are you saying that Google is surrendering that search to Microsoft?
Well, no, not necessarily, but I'm saying you can imagine a future scenario where Microsoft begins taking share. And Google's explanation will be, well, that was unprofitable anyway. These are so expensive to serve. We don't want to serve these long dialogues between people and the AI agent. It's not even providing anything for them. It's just kind of like social entertainment. And that'll be a strong sign that they're in the grip of the innovator's dilemma, where that actually, looks like a near-term rational decision for them to be making, but it puts them into severe competitive distress.
Hey, Brett, this is Courtney here. We're talking a lot about the future and corporate America really adopting AI. My question to you is, how long in the future do you see that, right? Because if we're talking this becoming really adaptable in 5 years versus 1 year, it's very different from an investment standpoint. Because it's not that we're right or wrong, but we could be too early on these things, especially in a time right now where a lot of corporate America is trying to pull back their expenses. So I'm just wondering how soon in the future you see this.
Well, as with a lot of disruptive innovation and the kinds of innovations that we invest in, innovation solves economic problems and macroeconomic problems. The fact that corporate budgets are probably under stress right now allows them to evaluate, hey, how can we do more with the same number of employees? How can we better service our customers or better execute on sales without adding to kind of our cost line? And AI provides that solution. So I think that the capability of the systems that exist today are already sufficient, certainly in the programming space, to massively improve the productivity of your programmers. But across every sector, I think that there's the opportunity for productivity delivery to corporates. And so, of course, they're going to onboard the technology because or else they're going to get outcompeted by somebody else who does. And from our perspective, costs here are declining by 3x per year. So it's more than twice Moore's law in terms of cost declines. And so whatever capability exists today, you're going to have 3x the capability times the amount of investment going into it a year from now. In fact, over through 2025, we think there's going to be 100 to 1,000-fold total capability improvement in AI systems economy-wide. And so it's the equivalent of taking the entire smartphone smartphone life cycle, original smartphone to today's, original iPhone to today's iPhone, and compressing it into 3 years in terms of capability advance. So if you're not running that race, you're not going to be in the race by the end of this business cycle.
I can't wait to see what Sydney's going to be like in 3 years. Brett, thank you. Brett Winton.
Very friendly, I'm sure.
Very friendly. ARK Invest. Guy, what do you make of this? I mean, it's interesting to think that the efficiencies will be gained over much shorter, compressed time period. So when we're talking about increased costs right now, those costs will go down very sharply, very quickly, if Brett's right.
Yeah, I didn't know there's going to be physics in this, and I'm not sure who Boyle or his or her law is or was. But listen, that's the bull case, right? It's going to get compressed to such a degree that you want to be betting on these stocks now because the cycle is going to be a lot shorter than people think. And listen, he's a futurist, so clearly he sees something that I don't see. But I would push back and say I think some of these stocks have gotten way ahead of themselves. We're about to talk about NVIDIA. I'll save it, but I mean that's going to be an example right there. But Microsoft, I think, proved that that run from 230 to 275 or such was not justified. It's getting towards levels that makes little sense in the pre-AI era.